Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, welcome to the Forex Daily Video Research. Today is October 19th and we will continue to track the euro currency. As you remember, our weekly recommendation, the conservative approach for the entering the market, was wait until market will close below this green line, that is 3x3 moving average, and close below the weekly pivot point. This is the blue dash line. As you can see, during the yesterday's trading day, we didn't receive any of these factors. Market, although penetrated this green line, close above it and close above the weekly pivot point. So now market just flirting with this dash red line, that is a monthly pivot resistance 1. At the same time, currently we have the move again below the blue line, that is weekly pivot point, and below the green line. In general, this pattern that we also discussed during weekly research, this is the MACD predictive failure indicator that should lead to the previous lows. Market should take out these lows around 137.70, I suppose, something like here, around the area of the weekly pivot support 1. So if market will continue to move to the downside, the nearest target is the weekly pivot support 1 and the lows just below this area. Also, take note that this is our disrespected weekly Fibonacci support that we discussed a million of times. This could be also the target of this possible move to the downside. And I think that some very extended target for this possible retracement to the downside, the monthly pivot point that has been traded yet by the market. And usually, in the 70% of cases, as I usually told about this, market should trade the weekly, monthly rather pivot points. Okay, so on the daily time frame, we should expect some development to the downside, because now we can see that market just tested weekly pivot point and move below it again, and monthly pivot support resistance 1 holds market very tight. So on the lower time frame, we'll discuss a bit in more details the current situation. Now let's take a look on the hourly chart first. This hourly chart of EURUSD. Now look at this. First of all, look at this area. This area of the extreme price currently, because market totally rejected this area when it shows wash and rinse and fast return back in this area and breakout down. So this consolidation was the extreme price. And the one thing that we do not want to see is the return of the price again in this area. So personally, I don't like to see the move of the market above this Fibonacci resistance, above the 140.30 area, 618 resistance from this high to this low, and return back in this range. It will mean that possibly market accommodate this price that was extreme high for the previous week, and possibly it can continue to move to the upside. I do not want to see this if I would like to enter on the short side of the market. Also, you can see how market protect this area. This was low, and yesterday market just touched it and moved down. Also look at this, market accomplished ABC bottom pattern 127 expansion. This also Fibonacci hourly confluence resistance 139.50, 139.56, and weekly pivot point. So this was a rather strong area of resistance. Market trying once, trying second. This is also the monthly pivot resistance 1, by the way, and returns back. Hourly trend turns bearish. Now the most important information now on the 4-hour chart. This is the 4-hour chart. Look at this pattern. We can see that is possibly the head and shoulders pattern is forming right now. Left shoulder, head, and right shoulder now on the way. But you can see that the left shoulder is much longer in the sense of time frame than is a right shoulder, and I prefer to see that this pattern should be symmetrical. I think that the forming of the right shoulder can be a bit longer than just one splash in the market, so market can move to the downside, then start retracement to the upside, and in sense of term it should be somewhere around 21st of October, maybe even to the end of the week, 22nd of October, somewhere right here. This formation should be formed, and possibly after that market can show some move to the downside. If we would like to talk about the today trading day trading plan, look at this ABC pattern, 618 expansion, 137.84, just below these lows. Okay, but this target is above the previous lows. In the terms of the head and shoulders pattern, the a bit lower second dip, a bit lower than current, it's look logical because the neckline in this case will be more horizon and the head and shoulders pattern will be more symmetrical. At the same time, I suppose that these lows should hold because this target just above the previous lows. Well, possibly, of course, market can start move to the downside and go further, but I think that that the right shoulder will take some time for the forming, like on the left shoulder. So personally, I would expect the reaching of this target and possible reverse to the upside to continue the formation of this pattern. Also look at this, we can see here the MACD predicted failure pattern, market trying to turn trend to the bullish but failed. It means that this loss should be taken out. As you can see, this target just below the previous low, so this looks absolutely logical because this is the 4-hour chart. This is will be sufficient for the current trading day, some 3 or 4 bars to the downside. So that's my point of view. There's nothing clear yet on the euro currency on the daily time frame and on the lower time frames, but I suspect that the market right now is forming the head and shoulders pattern, and the right shoulder will take some time for the ending of the formation, this right shoulder. Okay, currently I think that market can reach today as far as 138 or a bit lower, target 137.84. After that market can turn to the upside and continue the forming of the right shoulder. At the same time, the major break-in for the current trading plan is this area, 140 area of resistance. Market should not return above this area. If you can see that market return deep in this area, somewhere around 130.50 and above, that possibly will mean that this formation will be failed and market can continue and move to the upside. But at the same time, we can exclude some A, B, C bottom. In market will reach 100% expansion right here around these highs, just complete the BC against us, and then continue move to the downside. That's okay. The market should not hold in this area for the long time. It can penetrate it like right here, like here, but it shouldn't hold here for the long time. Okay, that's my view on the current trading day, current situation. Be careful and take your risk reasonable.